Good morning. Welcome to the Brew. I am your host, Live It Up Lex. Good to see everybody again. We are going to talk about Lucid Motors today. Earnings are coming out sometime in the stratosphere, sort of today or tomorrow. We'll talk about that in a second. We'll do a little breakdown on it and just chat about Lucid and then get some trading ideas on some bullishness. We're going to go bullish on this one, believe it or not. So let's see what Molly and Lex have in store. Bam. Hello, Mal.
Hello, Lex.
So how are you, first of all?
I'm good.
Okay, good. I'm glad you're good because we're going to have to do all kinds of sidestepping today. This is the big do-si-do to the left, do-si-do to the right. Lucid Motors. We're going to talk about that. Now, technically, we're going to talk about their earnings, right? However, unbeknownst to most people at this second in time, the earnings haven't come out yet. However, we're Wednesday right now.
Right. Are we Tuesday? Are we Wednesday? Are we in the future?
Wednesday?
Are we in the past?
Yeah.
Where are we?
So just figure that all out. Anyhow, what do you know about Lucid? Do you know anything? Let me just say one thing first. I was in California, not this past weekend to see you guys, but a year or so ago. This is when I got nailed by the mask police outside in an outdoor mall. They told me to put my mask on. I mean, this was years ago, a couple years ago, which obviously, drove me crazy. But there's a Lucid shop in the little mall I was in, a little fancy mall. And I went in there. First time I had seen one. Beautiful car, without a doubt. I sat in it. I said, okay, I'll take this one. And then they said it's $150,000. And I said, okay, is that all? I'll take two. I'm just kidding. I can't believe how much it was, especially relative to where Tesla is, right? And Tesla keeps dropping prices. Lucid has a very high price point, although I think they're coming out with a more entry-level, edition. Nevertheless, gorgeous car. I think the stats on the performance and the mileage, it's like 500 plus miles on that Air, just awesome. Like all these EV, new startups, Rivian, Tesla was like this for a while. Lucid's going to go through this as well. Really struggling with cash flow. It's a tough proposition in this market. EV is a tough market. However, the car is great. So what do the numbers look like? What are we expecting on this thing? Do you have some stats here?
Yeah, so analysts are expecting the company to report revenues of $175.3 million with production of 2,000 vehicles, which is up from last quarter. Okay. And the CEO actually worked on the Tesla S. And he mentioned he was on target still for 10,000 cars, but then he took that number down to 8,000 in Q3. So we'll see what happens there. But they are opening up production in Arizona. So they should pretty much be allowed to ramp up and meet those numbers based on demand. We also have a shortage of 27 cents on their stock, and I think the problems they have, and they're missing their production and deliveries based on chip shortages, and also chip shortages and supply chain demands, and they're actually diversifying their chip productions so that they aren't dependent on one, and also looking into developing different technology to remove that dependency. So we'll see what happens there as well. But they still stand at the longest range EV, but they aren't as fast as the Tesla. So the Tesla is 0 to 60 in 1.99 seconds, and they're 0 to 60 in 2.5.
2.5 is good.
2.5 is good.
It's good.
But we're looking at the Plaid. The Plaid's pretty amazing.
Yeah.
And one thing I wanted to point out is their main backer is Saudi Arabia Public Investment Fund. And so that we kind of, with everything going on with BRICS, we might want to take that into account, that their main source of funding is in a an area, all of their producing in Arizona. They're also about to produce in Saudi Arabia. So, with things that are happening overseas, we might want to just keep an eye on what's happening there as well.
Okay.
So
Interesting.
that's the case. Yeah.
Yeah. So, are we bullish or bearish, do we think? Or do we not know?
Well, I'm not, listen, I'm over here. So anything heavily invested by, an invite from Bricks. They aren't a member yet, I don't believe, but
Yeah.
they've received an invitation. I would tend to put my eggs in the other basket of the EV. We own Tesla. We own a Tesla and we love it. And I'm just, as far as whether you should invest or whether you shouldn't invest, as part of that new using trading as a vote, I might veer towards Tesla. And I understand the big brother conversation about all that, but I still lean that way. What about you?
Well, I'm about you. Well, I have a Tesla too, and so I'm a big Tesla fan. Although I love this car. Incidentally, we are not giving investment advice. It's just our opinion on what we would do. You'd have to make your own decision. Am I bullish? I think I'm bullish on this one ultimately. I do.
Yeah.
I don't know how long it's going to take to pull themselves out of this. This is very common, right? These big capital intensive startups, whatever you want to call them. Tesla was one of them. You just suck cash down like nobody's business. It's like me on a Friday night. You're just
Right.
just ripping through it, right?
And they're a young company. So they're still in that process.
Yeah.
Off.
Right. And they got good funding behind them. So, I'm probably ultimately a little bullish unless, there's something that I don't know under the sheets that this company is doing that's really stupid, which there could be. So I am long-term bullish, I think. But, look at someone could come give me a cold, crisp Chardonnay and they can convince me into being long-term bearish too.
Right.
The problem I have with this stock is it's a $4 stock, right?
Hard to work with.
Truly despise trading $4 stocks. Okay.
Yeah. And why?
When you can see the ground from where you're standing at $4, meaning zero, that's no good. I mean, I can almost touch the ground from $4, right? $100 is a long ways from zero. $4 is very short. So someone said, well, shit, if you're long, why don't the hell you buy the stock and do a collar? Okay. Wonderful idea. I love it. Do a zero cost collar, keep rolling it out. You're in business. You don't get the full upside on these little baby stocks. So I'm trying to think of something more dynamic.
And it's at an all-time low, this price. So they've lost more than 80% of their value since
that's a good point
trading 2021. So this might be the time to get in if you are pro Lucid. So
yeah, I'm sharing my screen. I'm unsharing my screen. Let's go back to sharing the screen. Are you ready for this? I'm ready. Okay. So I put a couple spreads out here. Let's talk about Lucid for a second with spreads, with options. Our gig is options trading, right? So I come from that world. I always want to have an option strategy when I have an opinion or when I don't have an opinion for that matter, but it's always around options. I'm not a stock trader, meaning stock to me has zero value. Okay. And the reason I say it has zero value, I'm going back to the two of us while we're doing this. The reason I say it's zero value is because I come from the hedging world, right? And when we use stock to hedge something, it has absolutely zero theoretical edge to us. Yeah. So I come from that, and I've got to come up with something that has edge to me. And it always centers on options. And I could use some stock, but I tend to like to use the options as well, or at least 100%. That sounds weird, doesn't it? So a couple things. If I'm bullish, I need to take advantage of that wonderful upside, right? So what I've done here, let me expand so I can see this better. What I've done is a couple different spreads. The one I have in here now is a 2x1. I call it a back spread, a ratio spread, a long ratio spread. There's all kinds of names for it. We call it a back spread, okay, as opposed to a front spread. A back spread means that you are long more options than you're short. And if you can see in the picture here, I'm buying two of these 5.5s, okay, and I'm selling one in the 4.5s, and I'm doing this way out in time. Okay. Do you see that I'm in September of 2024? That's
Right.
way the heck
Okay.
out there. Okay. That's
Yeah.
almost a year away from now. Okay. So what does this mean? This spread is not going to do well in between 4.5 and 5.5, even up to like 6.5. It's not going to be great. But we bought time by putting it way the heck out there. Okay. I'm going to pay, what's this say, about 56 cents on this. That's the midpoint. So let's pretend I do this for 50 cents just to be fun. Okay, I'm changing the price. I'm going to pay 50 cents for this. It's going to take me a long time to lose 50 cents. Okay. So if you look at the risk graph of this trade, this is what it looks like. And I went down to $1 on the low side. Just make it zero. Who cares? The most you can lose is $56 in this example. Okay. Or $50 is where I put it there. My upside is, and I'm going to hit this little thing. My upside is infinity. Why is it infinity? I have an extra unit on that second call. Okay. So I'm long 2 calls for every one that I'm short. I've only done this 2 by 1, but you can do the math. I can do it 20 by 10. I can do it 40 by 20, 100 by 50, etc. It just depends on the size and the amount of capital you have. And that makes your P&L get bigger and bigger and bigger, right? As the case may be. But you can see this nice, pretty graph, and it's really bullish, as I said I was, to the upside. Now, I start breaking even at around 7 here, okay? So you, as a trader, have to have a little bit of information, or at least a little bit of research as to where you think this could go in over a year. Now, tell me about the stratosphere of this stock. Where did it come from? Do you know where it IPO'd? I want to say, we can figure that out too. Let's go to charts.
Yeah.
So I'm looking at 7 of 2022, July of 2022. A little over a year ago, $22.
20. Okay.
Thereabouts. Okay.
Yeah.
Now we're at $4 where I can see the floor down here, right? Up here, floor's pretty far away. So, look at this stock could be back up there without a doubt. Now, what I like to do with these things is when I have this back spread, what I call a ratio spread, I can kind of lose in this zone. And remember, I bought time. I've got a year to go. Okay. So what you can do with a spread like that is you can get yourself into a situation where you use front month sort of options to sell, stuff. You can sell iron condors. You can do call spreads. You can do put spreads, all credit spreads, and collect credits week in and week out. So
a little crumb collector.
You can be a crumb collector to offset that 56 cents. So remember, if I can collect, let's see what I can get on this one. If I can collect, what is this little spread here? Let me just get rid of that. So this is a put credit spread. It's 15 cents. Okay. So if I can collect 15, again, I'm bullish. Don't forget about that. This is a risk defined spread. It's going to add a little bit more loss to my downside if I do this. And the stock tanks from this point. But if I'm collecting these 15 cents, I only have to do that about 3 times, 4 times before I own that back spread for free. Do we understand that? Make sure. Selling 15 cents, collecting 15 month or week 1, then do it again the next week and the next week. But if I do this 4 weeks in a row, I can collect that 15 cents. I'm break even already. I've covered my costs in the other. I don't have to do another one of those if I don't want to. I probably will. Right. And then be up for a credit on these things. Now I can't lose on this. Now, that's a big if, right? We got to be careful here. There's no guarantee that the stock doesn't tank and go to zero. However, we've gone into this with the presumption and trade plan that we are bullish, right? So being bullish, we can use premium to offset our short premium to offset our long premium, have a great spread on, and then kind of ride the balance for free if we want, or continue to sell, either put credit spreads or iron condors, however the case may be. What I'm trying to do with this strategy is do I have a marking tool? Oh, no, I don't have one of those yet. I'm trying to fix this zone right here. And that's what my credit spread does. It lifts this little dimple up toward even every time I can sell something, right? And the great thing about TradeHawk is it's got strategies in here where you can keep track of. You notice I have no position on in this particular 0 DTE strategy. It lets me, I can keep putting this in a strategy and seeing how I'm doing so I can see what my cost basis is, right, in this trade as time goes on. So it's a beautiful concept, right? And you can keep track of where you are in the whole trade using that strategy tracker, using what if, And being intelligent. Notice what I don't have, and I haven't let you say a word yet because I'm going fast.
No, I love
You're going to get in here in a second. What I don't have is I don't have infinity risk. I don't have short units. I can't lose infinity. I can only make infinity. So my risk defined measure in my strategy is always be unit neutral at best. Okay, or at worst, I should say. That means that I am never short more units than I'm long, whether it's a put or a call. I can be long more units than I'm short. That's okay. I don't want to do the other thing because it's a risk metric I do not want to take. Even if I had $1 billion, okay, I don't want to take that kind of risk. That's unmitigated risk, okay? So this is a cool little strategy. There's all kinds of other ones we can do here. This is one I kind of picked out of the hat just based on some implied volatility levels, which is pretty high. So I was able to get a decent, 2x1 on the long side of that call spread. And now I can sell some stuff against this along the way. Once earnings comes out, this premium will drop a little bit. These options are very small priced, so there's not a lot to go. Again, you can see the floor. So, there's just tough trading these little bitty baby stocks. These are there are options that are more pricey than $4, right? In normal times.
Right.
So
Well,
anyway,
what would you recommend?
Say something. I'm sorry.
Yeah.
So if take a drink of my Chardonnay.
So so you have someone new. He's never traded before. She's never traded before, and he or she wants to jump in and play around with a baby stock. Would this be a good one, or how does volatility combined with, price point? When you talk about it in a retail perspective, a price point. So how do those?
That's a good question. Here's what I'd say to that. So if you have a smaller account, right, and you're a retail trader, clearly smaller stocks behoove you, right? Because you don't have the big option premiums. When you margin things in the retail world, you have to pay for your stuff, right?
Yeah.
So if you have a max loss of $5 or 40 cents or whatever it is, you got to pay for that. You got to put enough money up to pay for it. These numbers on a $4.50 stock are going to be very small, right? But when you have an infinity equation like we have in this setup, you can do pretty well. These are stocks that are tough to trade in and out of in terms for a retail person, really. There's just not a lot of juice in these options. You know what I mean? So, but I'm not saying it's not a good thing. I wouldn't, necessarily trade this in and out, day trade it so much. There's probably not a ton of movement. An ATR is probably very small. I'd put on a position here with an opinion of bullishness or bearishness and go nuts, and then pay very close attention to implied volatilities and, these kind of spreads.
It'd be interesting. Yeah. Interesting. I wonder what would happen with interest rates climbing and someone goes to, these are more expensive cars. So watching the Fed also might be opportune. They just came out and I think a lot of people are saying that they're going to hold rate hikes. So I wonder if that might help their numbers, but our rates how fast are they going to come down? So when you buy this car, someone bought this car a year ago, it was half the price a year ago.
Right.
Now, when you go get a loan, it's twice the interest, twice the all of that heavy cash flow burden.
Yeah, obviously interest rates have an effect on anything you need to borrow money for, whether it's real estate,
right?
Cars, you name it, houses. If you're borrowing money for school, higher interest rates have an effect on you as a consumer that weighs you down, right? We know that. So it is a problem. It is an issue. I can only say that. And we have no control of that technically, unless we're hedging for interest rates, which we'll get into in another show. But I think that price point for this Air model, and I think Lucid's coming out with something cheaper. Like I said, it's $140,000. That's a tough entry. The bulk of America isn't paying 140 grand for a car. I don't care what you do with it, right?
And you're right. And Tesla's instigated some price battle wars. So, which is hurting Lucid's cash flow. So we might want to also take when these earnings, come out, we might want to take a peek at their cash flows. We like strong cash flows and strong balance sheets. So
right.
We'll see what their leverage.
Let's keep an eye on this. If you make a note and we make a note, let's take a look at Lucid in a month or so. And the other, just to sum up real quickly, I just want to make sure we have this nugget. Make sure that back month spread. Remember, I did the 2x1. I call it a back spread. So I bought some extra calls in a year away. That's a fun spread when you can do it with good volatilities, right? So that's my explosion spread, right? We call that the explosion spread. That's good for explosion, upside explosion.
High volatility
stuff, the short-term stuff, taking advantage of theta harvesting.
Ooh, I needed that.
Drink. Okay. So that's what you do. You theta harvest to pay for your back month explosion spread. Keep selling stuff, selling it, collect. Back month's there to not to protect you, but for the big, you're hoping for this big bullish move, and you just keep collecting.
Right.
Doesn't always work. You have to be crafty, and you have to take these things off and roll them. But great little spread. I love doing it like that. Anyhow, that's all I got today on the Lucids. We'll talk about some of the earnings results when they actually happen. They're just taking forever. They're like taking a day and a half for us, sort of, in fake time. Right?
I know. We're in the future. We're in a time capsule right now.
Yeah, in a time capsule.
We'll circle back.
As always, Mal, good to see you.
Thanks, Alex.
Happy trading. I don't have a tagline yet.
I know, but can we cheers? Can we just bump the screen?
How do you do that?
Cheers on that. Here, salud.
Oh, that's cool. All right. I love it. And as soon as I hang up with you here, I am going for real cocktail hour. So I trust me on that one. So anyway, trade safely, be disciplined. I always tell people, I've got people asking me questions about trading all the time, and I always say just the same thing over and over again. I don't care what the heck you do. Buy premium, sell premium. I'm a premium seller, but you got to have discipline. If you don't have a plan and you don't have discipline, you're never going to make it. So, bam.
And on the other side of discipline is freedom, right, Lex?
Freedom. I love it. Freedom. All right. Good to see you. We're going to go. We'll talk Friday with Paulina.
All right. Bye, Lex.
See ya, Mal.